Hey everyone, and welcome. Today, we are tackling a truly foundational piece of your financial life insurance. Now, let's be honest, it's probably not your go-to topic for dinner parties, but getting this right, it's absolutely crucial for long-term wealth building and protecting your family. I'm going to be your guide through this explainer today. We're going to completely cut through the jargon, clear away the fog, and make the underlying mechanics of these policies incredibly crystal clear. You know, when it comes to life insurance, you're usually staring down a fork in the road. And that leads us to the ultimate question, pulled right from our source material today. Which one is actually worth it? Is it term life or is it whole life? Getting this answer right can literally mean a difference of hundreds of thousands of dollars over your lifetime. So the stakes are pretty high here. Okay, let's dive right into this. Here is our roadmap. First, we'll look at the great insurance debate. Then, we'll understand term life in Section 2 and whole life in Section 3. For Section 4, we'll put them in the ring for a head-to-head matchup. And finally, Section 5, we'll figure out which is worth it.
Section 1. The Great Insurance Debate. If you've ever talked to an agent, you've definitely met the two heavyweights of the financial world, term and whole life. Let's strip away the sales pitches and just look at the raw mechanics. Section 2. Understanding term life. Let's step right into the ring with our first contender. So, term life insurance is a policy that provides coverage for a specific period of time. That's the term part. And it pays out only if the insured passes away during that specific window. A really great way to think about term life is to imagine renting an apartment. Renting is, relatively cost-effective. It gives you exactly the shelter you need for a set period, like a one-year lease. But when you move out, you don't take any equity with you. You are simply paying for the protection of having a roof over your head for that specific time frame. The key features here really show just how streamlined this renting approach is. First off, it has a temporary time frame, usually lasting 10, 20, or 30 years. Second, it boasts a much, much lower initial cost. Third, it acts as a pure death benefit, meaning its sole purpose is to pay out if you pass away. And fourth, going back to that apartment analogy, there is absolutely zero cash value. Once the term is up, the policy just disappears, and you don't get your premiums back. It is pure, straightforward risk management.
Moving on to Section 3, Understanding Whole Life. We really need to slow down and carefully unpack this second contender, because its mechanics are significantly more complicated. Whole life insurance is a permanent policy. It covers you for your entire life, assuming you keep paying the premiums, of course. And it includes an underlying investment component known as cash value. So if term life is like renting an apartment, whole life is like buying a house with a mortgage. It requires a much larger monthly chunk of change, but the structure is permanent. And just like paying down a mortgage builds real estate equity, paying a whole life premium builds internal financial equity over time. So the crucial point is how this added cash value component radically changes how the product functions. Yes, it provides lifetime coverage, but that comes with much higher fixed premiums. The big distinction here is that accumulation of cash value. Over the years, a portion of your premium flows into a savings-like vehicle inside the policy, and that grows tax-deferred. Eventually, you can actually take out policy loans against that cash value while you're still alive, which is obviously something you just can't do with a rented apartment.
Section 4. The head-to-head matchup. I am putting on my referee hat right now, remaining completely neutral as we pit these two options directly against each other. Our first battleground is cost. Term life is famous for being highly affordable, with lower monthly premiums, which efficiently frees up your cash flow for, other investments. Whole life, conversely, demands a high fixed premium. That's going to become a major permanent line item in your monthly household budget. And the difference? It is a staggering 5 to 15 times multiplier. No joke. For the exact same death benefit, let's say a $1 million payout for your family, a whole life policy can be 5 to 15 times more expensive per month than a term policy. So if term coverage costs you $50 a month, a whole life policy could command anywhere from $250 to $750 a month for the exact same face value. That is a massive diversion of your monthly cash flow. Now, what's really interesting about this next point is how coverage duration factors into a family's evolving financial timeline. Term life expires. You pick a 10, 20, or 30-year window based on when you project reaching financial independence. Usually when the kids are grown, the mortgage is paid off, and the retirement accounts are full. Whole life, it's guaranteed until death. It never expires, meaning whether you pass away at age 45 or age 95, a death benefit payout is absolutely guaranteed.
Our third battleground is cash value, which presents a really fundamental financial trade-off. With term life, you accumulate zero equity. It's pure protection, plain and simple. With whole life, you are actively building equity over time. That massive 5 to 15 times premium increase we talked about, it doesn't just vanish into thin air. It basically capitalizes an internal savings vehicle. You're paying a premium to force savings within an insurance wrapper.
All right, to summarize this entire matchup, for term life, your biggest pro is maximizing coverage for a minimum cost. The biggest con? It eventually expires and returns nothing. For whole life, the biggest pro is guaranteed lifelong coverage paired with a growing cash asset. But the biggest con is that incredibly high cost. And hey, here's a surprising fact from our sources to consider. Roughly 20% of whole life policies are actually surrendered or lapsed within the first 3 years, simply because people end up unable to keep up with those steep fixed premiums.
Section 5. Which is worth it? It is time for the final verdict.
Look, there isn't one universal winner here, so let's break it down. Term life is worth it for most young families who need maximum affordable protection during their peak earning and child-rearing years. If your goal right now is purely to replace lost income if tragedy strikes, just making sure the mortgage gets paid and the kids can afford college without breaking your current budget, the renting method is usually the undisputed winner. It gives you immense leverage for a very minor monthly cost.
Whole life, on the other hand, makes sense for a highly specific demographic. It's really ideal for folks with lifelong dependents, maybe a special needs child who will require financial care indefinitely, long past the parent's own retirement. It's also suited for complex estate planning, like providing immediate liquidity for estate taxes, or for high net worth individuals who have literally already maxed out their 401ks, IRAs, and other traditional investments, and just need another tax-advantaged place to park their wealth. In those very specific complex scenarios, the buying method makes complete logical sense. Which brings us to the end of our explainer, and to a final, absolutely crucial question for you. Based on your current life stage, what does your family's financial future actually require? Do you just need the affordable, temporary heavy lifting of a term policy to safely get you to retirement? Or do you have the specific, complex estate needs that justify the lifelong permanence of whole life? I really encourage you to take this framework, evaluate your personal balance sheet, and decide whether your journey requires you to rent or to buy your protection. Thanks so much for joining me to unpack this source material and keep on learning.